morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew. How are you?
I'm well. Welcome back.
Thank you.
We've got a bit of activity in Australia this week. We've got the RBA meeting later today to set interest rates where you would think they will stay as they are. But there has been a few murmurings in the local market that they may put interest rates up in coming months if inflation is not brought back under control.
Exactly right.
And as we can see there, it is still clearly above their target band.
Yes, it sure is, and there's about a 40% probability, they're saying, by September, so we'll just see how it all drops. I'm looking forward to hearing the rhetoric coming out today by the governor and what her views are. I think she's far more aggressive from an inflation stance than the previous governor, and she's not going to be on the back foot. I think she's on the front foot to attack it. So, yeah, just let's see her mood and naturally how the market interprets that.
Yeah, I don't think she'll be, if she has to put up rates, she will.
Oh, yeah, she's not scared.
No, not at all. So, but yeah, we'll see how that plays out. Obviously, that's helped the Aussie dollar back over 66.
Naturally.
Yeah,
it's been a great trade this month.
Yeah, it's partly that, and also the US is a little bit weaker as well. But certainly pushed it up quite a bit.
Yeah, when you're looking at it from, what we dipped up after Anzac Day, and then all of a sudden, boom, it's really done quite nicely over that period, and I'm sure that there's a little bit more blue sky ahead of it.
I think so. Over to the euro. The GDP numbers came out last week, 0.03. 0.3 up, so we do have a pulse in the Eurozone.
It sure is, and that's a good sign. So let's see how that goes for this running quarter. If, you're coming into tourism, you're coming into summer, and traditionally it's hopefully going to be a better print. So when you look at the chart over the historical, over that 2-year window, it's all over the shop, isn't it?
Well, it's been pretty dire. If you look just over the last 12 to 18 months, they're pretty horrible figures. So, but interestingly, like the CPI is around that just under 2.5%. It seems to be hanging around that mark at the moment, where you would think they would be reasonably happy with that.
I'm sure they would be, and I feel as though you'll probably see a rate cut come summer. It's hard to pinpoint the month. They only know it, but you're now in May. So we've only, it's really that June, July, August. It's the next 3 months, and then we're back into our autumn, or our spring here, and they're at the tail end of summer. So I'm expecting it to be a hot summer.
Yeah, and the CPI numbers out of the likes of Germany, France, Italy, etc., are all quite low as well. So you would think that a rate cut probably wouldn't be too far off.
No, I agree with you.
Now, over to the US, obviously still in the midst of earnings season. We'll touch on that shortly. Non-farm payrolls considerably lower than expectations, which lit a fire under the equity market.
Sure did. The Nasdaq was up 1.99%. It was up about 1.3% overnight. So it's a big move in 2 sessions. The best part of nearly 3.5%. And we hit 175,000. Consensus was 242,000. So it's well shy. And that could be just the the shot in the arm that the Fed is looking for. So I can't see any form of rate cut in the next couple of months. So that's probably going to push that US dollar, hold it where it is, or it's not going to take a tail dip. So,
yeah, and also Jerome Powell spoke last week and just reiterated not so much about rate cuts, but leaving the rates as they are, unlikely to put them up again at this stage. Obviously, if the numbers come in to change that.
Sure.
But on the back of that as well as the earnings coming out of some of these big US companies, and some of these earnings results are strong, aren't they? Outstanding again. So the equity market's looking very healthy once again. So, finally,
wow, what a chart!
5 years ago, if you put your money in 5 years ago, how did it perform? And top of the charts,
India. The old India. I tell you what, it's a vibrant economy, and it's just booming, and it's had a strong run up, as we've seen from the last year and a half to 2 years. It's been dynamic. And Tokyo, you can't leave the Nikkei 225. It's shot to the upside as well. You wouldn't want to be in Hong Kong, mate.
No, it's a pretty telling chart, that isn't it? Hang Seng, you've lost close to 40% of your money.
Yeah, whereas you've nearly doubled in India.
Yeah, which is incredible considering, looking back at what that Hong Kong market was as a financial
it was a hub, wasn't it, of Asia?
Yeah, it's interesting.
And China's well down as well. So it's not as though it's China's performed well.
Yeah.
It's performed poorly.
No, but I think the interesting thing out of India as well is that from an offshore perspective, you can't buy Indian shares individually at the moment. So to get in, most people are doing it via an ETF. So, but I think you look at India and what that future holds over the next 10, 20 years, incredible.
Yeah, young population, we mentioned that, 29 years of age is the youth of a country versus the likes of Japan running at 50 years of age. There's the first part. Second part is it's dynamic. They've got a very solid push from infrastructure and from innovation. So they're rebuilding a nation or building it for the first time. And I've been there 3 times in the last year and nothing, it's just spectacular. You can feel the energy of the place.
Yeah.
So I'm sure that you come back in another 2 years, and I would say that'll be well up from 1924.
Yeah. And I think from a global perspective, having a young population is such an advantage.
Exactly, versus China, an old population, or an older. Yes, it's dynamic. It really is, and they're agricultural based. They've got great weather. You're surrounded by oceans. They've got deserts. They've got valleys, rivers. They've got plenty of highways crisscrossing the nation, and they've got infrastructure that's going to be world class. So yeah, exciting and a great place to visit.
Yeah, that's for sure. All right, we'll keep an eye on what the RBA does later today. Bank of England meets later in the week.
Yes,
unlikely they would change rates at the moment, but once again, you're looking at what the commentary is around that.
Oh, of course, that's what we're hanging on. I mean, the pound, it's been a great week to trade pound versus yen, dollar versus yen, Aussie versus yen. So, yeah, the Japanese, as you saw, very weak currency, but very strong equity market.
Yeah, it certainly is. All right, we'll keep an eye on things and catch up again next week.
Look forward to it, Andrew.
Thanks, mate.
Thank you.
And that's the XM.com weekly market update.